Is going on, everybody? Welcome into another edition of the Daily Energy Newsbeat Stand-Up here on this gorgeous Monday, October 9th, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. My man, how we doing today?
Hey, it's a beautiful day in the neighborhood. We're going to have fun.
Yeah, it's going to be a pretty crazy show. Lots going on this weekend. Holy smokes. First up on the menu, coming sooner than expected, carbon disclosure rules coming for U.S. companies. This is something that we know has been coming down the pipeline for a while. The SEC is about to get involved here, so Stu's going to talk everything ESG related to the SEC. Then we got to fly overseas, Stu. This is probably some unfortunate news that happened this weekend. All of the news surrounding what's going on with the terrorist attacks in Israel. Stu's going to have a comprehensive top to bottom look from an energy perspective. The article he selected for this for oil, it's not 1973 again, but it could still turn ugly. So Stu's going to keep us on top of everything going on out there. Next up, we're going to talk Shell CEO plans company-wide meeting to discuss shift back to fossil fuels. All hands on deck in terms of Shell going back to fossil fuels. We've been on this one for a little bit. New CEO Wallen Sam has really marked a shift back to oil and gas, and he will meet later this month. Stu will cover all of that. And then next, BP's $4.1 billion bet on renewable natural gas gets underway. Really interesting topic. I think this idea of renewable natural gas, I love how now we're branding natural gas as renewable. So it's, we've called this 3 years ago. Stu was on this way before this. I think it was before COP 18 or 19 back, or I think it was COP 20 when we started doing the show. Stu was all over this. So
16.
16, we will COP 16. Yikes. We will dive into everything renewable natural gas and what BP is doing. And then Stu will toss it over to me. I'll quickly cover kind of the horrendous slide we have in oil prices. Looks to me to be a little technical. I'll cover some of my favorite musings from that. And then obviously the big news in the oil and gas M&A space, ExxonMobil rumored officially to be buying Pioneer Natural Resources. As this is all rumors, we don't know much. We do know that the asking price may be somewhere around $60 billion, but Stu and I will dive into all things Exxon, Pioneer, and what this may look like for the future of large-scale consolidation M&A in the oil and gas space. Before we do all that, guys, remember, all of the news and analysis you are about to hear are brought to you by the world's greatest website, EnergyNewsBeat.com, the best place for all of your energy news. I liken it to, if you like to be on the tip of the spear when it comes to energy news, EnergyNewsBeat.com is the place for you. Stu and the team does a great job of curating that website, making sure it stays up to speed with everything you need to know to, again, be on that tip of the spear. You can look at the description below, see all of the links, all of the timestamps. You can skip ahead, pick the articles you want to listen to. You can contact the show, questions at EnergyNewsBeat.com, or via the description below. Connect with Stu and I on LinkedIn. We got a little data news product we're working on, dashboard.energynewsbeat.com. Go check it out. Give us some feedback on that. We've got some stuff we'd like to change up there. But that's about it, Stu. We got a big show. I think the big news obviously is what's going on in Israel. Let's start there to make sure we have enough time to cover it. Walk us through start to finish. What's going on there?
Okay. It is a horrific thing, and our hearts and prayers go out to everybody.
Yes.
But Michael, with us and taking a look at the Energy News Beat, this is also about geopolitical and energy. And so when we have to understand, the attack happened on an anniversary 60 years ago, the Yom Kippur War of 1973, October 6th to October 25th. Here's the key. I got this graphic in there, and this is off of Twitter. Crude, Michael, went from $5 to $50. Wow. I went to Oklahoma State, but what percentage is that? A bunch. Interest rates from 6.5 to 18%.
Oh, that makes me shiver.
Gold 42.22 to 875. Stocks lost almost 50% the following 52 weeks, but ended about even after 7 years. So this was the Yom Kippur War, and Yom Kippur is a really big day for the Jewish faith. And so when you go in, take a look at the other things in here. There are several bullet points that I just want to cover these as we outline them out. The crisis is not a repeat. All of the Arab countries joined in against Israel. This is now not that. Egypt, Jordan, Syria, Saudi Arabia, and the rest of the Arab world all pigpiled in on Israel. This is Palestine, and this is Iran. And so when you sit back and take a look at Iran, what just happened, Michael? The Biden administration just freed up $6 billion. There is a correlation there. The oil market itself doesn't have any of the pre-October 1973. Oil demand was surging. The world had all of its spare capacity just wiped out. Now we have OPEC and we have Russia and we have OPEC Plus balancing out production versus demand. And so, Michael, you and I have been beating our heads up against the wall trying to figure out supply and demand rules have been thrown out. And so this is not the same. And I think the author has a very good point that number two, the oil market is not the same. However, they are not, you take a look at this, aren't trying to boost prices beyond a few extra dollars. OPEC and OPEC Plus and the Saudi leaders have said they want it at that 100 mark. They don't want to go below that because their profits are coming up big. So,
well, and this plays into the idea of, having as much spare capacity. I think what's interesting is this. And so the article that you bring up here mentions that this terrorist attack that's going on right now in Israel it's from Hamas, but it's really led behind the scenes by Iran. And part of this has been a result of the fact that we've been allowing Iran to bypass, quote unquote, export oil bans. And we've been sort of turning a blind eye to this. So one thing I find interesting is that in response to this attack, we might now actually start enforcing these sanctions. It remains to be seen, but they might doing this. That alone might push oil prices above $100.
I don't think we will.
Okay.
I'm going to take the advocate side of the Biden administration that the Biden administration does not understand where the next bag of depends is going to come from. They have weaponized the dollar and they have no way to enforce it. So I truly don't think they're going to enforce anything on Iran.
So I love Javier Blas. I've read a few books by him. He's a great reporter from Bloomberg.
Yes.
The number 8 point in this article
is key.
I disagree with, though.
Why?
I do not believe we have enough oil in the Strategic Petroleum Reserve to deal with another crisis. That was basically his other non-comparison to 1973, was that we have an SPR to work with. We've got a little bit of it. We don't have much. He goes, although it's at its lowest levels in 40 years.
I was going to say.
Big if. It's a big although. Although he's dead, he could maybe help us out in the future.
Javier's a rock star. And I mean, he is absolutely very, very knowledgeable. But we are in a geopolitical nightmare.
Nobody bats 100%. In baseball, you bat 300%, you bat 33% of the time. You're in the Hall of Fame.
That's right. Now, you take a look at who's going to benefit out of the Middle East war. It's going to be Russia. Russia and Iran are going to Iran's got some cash flow that they've unbelievable cash flow now. You're going to see that come in, but you're also going to see the oil from Russia. They're going to sell everything they possibly can. So the winners out of the war is Iran and Russia.
So before we move on
an energy side, I got to clarify that the energy winners.
I want to bring it back to the beginning of the article where you talked about, hey, the comparisons to the Yom Kippur War and what's happening now. You talked about oil prices going from 5 to 50, interest rates from 6 to 18, from gold to 42 to 875. Do you believe that's going to happen right now? Or do you buy this article's analysis that it is different and we may not see that, large of a spike in commodities prices.
It is different, but yet the same. And we have a fantastic person out there. What is it? Both of these things can be true.
I love Tisha Schuler. Both
Tisha Schuler.
things can be true.
And this is where I think we're going to play both sides of the fence here. Both sides, both things can be true. And that is, you take a look at the percentage of 5 to 50 crude. We're already at 100 at the strike price where Saudi Arabia really would like to keep it. Russia's making money hand over fist.
We're at 84 Brent, so we're not quite there yet.
But if you take a look at last week, Russia sold Russian crude to India for $20 over the sanction price. They're not supposed to sell any Russian oil over $60 a barrel. They sold it at $80. India bought it. They're buying everything they can at 80. So even at a discounted price, it's there. Interest rates. I'm sorry. They're going to look at raise the interest rates again because the Fed is looking at, Michael, are you ready? They think that the economy is still going good. And they think that 3.5% unemployment is actually too low, but you have to analyze, and I'm going to go off sidetrack for just 1 second. The jobs numbers this past week were absolutely horrific. 40% of that estimated 300,000 jobs, government. The other 40% were part-time jobs. So you start taking a look at the real high dollar, high net worth, those were 10,000 jobs. So the real job number, federal government does not create any value or jobs to the market. They are a job sucking black hole out of the life of Americans. So think about those job markets. Think about the Fed thinking that they're going to increase inflation. Will it get to the 18%? I don't know. Will it get to higher than it is? Yeah, I think you're going to see 2 more Fed raises.
I think you're going to have to, because I think you are going to see a commodity price, especially when we see natural gas at $3.33. We're going to see, I think, a commodities boom. So great coverage. Energy Newsbeat's going to have everything breaking down what's going on with this war, with this terrorist attack in Israel from an energy side. Stu's going to keep us up to speed on it. We appreciate it. Let's come back home, though. Carbon disclosures coming for us.
Oh my goodness. Just get a rock and hit me in the forehead.
Will do.
Treat me like a husband. Coming around sooner than expected, carbon disclosures and rules for U.S. companies. Oh my goodness. Okay. You and I talk about this every show, blah, blah, blah. Legislation through regulations. Now, the size of 2 economies, if California was a country, it'd have the world's 6th largest economy, and the EU as a block ranks 3rd. Okay, that means everybody's got to listen to these 2 knuckleheads. They are coming, says Sarah Mahaffey, ESG strategist at RBC Capital Markets. She's up there. And both the California and European Union are poised to approve rules that require companies to do both business there, to disclose their emissions. The rules that apply to private as well as public companies and require businesses, Michael, listen to this, to calculate and disclose emissions from their suppliers and customers, which goes what is out of expected. My head just exploded. If you want to dissect that one line, Michael, how in the heck are you supposed to go out and say, I'm going to manufacture a Hershey bar, let's say a Snicker bar, right? Okay, you got to have oil to get the plastic to wrap it. You got to have coal in order to run your generation of your plant. You got to haul the cocoa from Brazil. You got to then, this is horrific.
Forget about chocolate. Think about our podcast. I mean, you've got the mics. Think about the disclosures we would have. I mean, literally, this, in my opinion, applying this to both private and public companies is exactly why we've been hounding on legislation through regulation. And Stu sounds like a broken record. I make fun of him for, but he's been on this from the beginning. And this is, in my opinion, the first hand waving of, hey, they're actually going to do this will devastate small. You're going to see thousands of private companies reestablish themselves as Nevada corporations or Delaware corporations.
That is one of the key things.
There are a few. The problem is the companies that can't reestablish, a Nevada corporation or a Delaware corporation or a corporation somewhere else. Guess what? Imagine the restaurants. That the small mom and pop restaurants in California that now would have to do this is a disaster.
Oh, yes. And here's why. There's the underlying theme of this article and about 4 others that I read this weekend. Are you ready? There is a company that is going to be set up that is going to be the gatekeeper for your emissions reporting. They're going to be worth billions. Who owns that?
I'm sure Larry Fink and BlackRock.
No, Bill Gates, I bet. When you sit back and think about who's going to own that, this is a scam. And the politicians who own that, you're going to see how it ends up.
This will clearly be fought in the courts. So obviously, this isn't like when he signs it this week, it's going to happen. But this is what they want to do, and it's a step and a move prior to an eventual move by the SEC.
Correct. Now, here's the other piece of this ugly baby. And this ugly baby is got buck teeth like the ugly squirrel we normally talk about. The absolute disgusting part of this is right now, the proposed legislation has, Michael, Scope 3 emissions. There is absolutely zero way to track Scope 3 emissions. That is like having an EMP operator trying to track the emissions from cars. You can't do it. It is not within your realm, so that you're going to pay taxes on all the cars' carbon output. Here's the one last thing. 17 states have already laws that allow them to automatically adopt anything Newsom puts in. All right.
Crazy.
Let's
go
to the next one. All right. Now, let's go to Shell. CEO plans company-wide meeting to discuss shift back to fossil fuels. Michael, this is almost a test or a tee up for the other articles with Exxon, because if Shell and BP and everybody else is realizing, hey, wait a minute, fossil fuels is where we're going, and the death of ESG investing, all of this is now leading into it. Shell Chief Executive Officer Wal Schwan will meet with employees later this month to discuss bringing a greater share of investments into fossil fuels. Quote unquote, we appreciate that our staff are engaged in and have a passion for both the energy transition and Shell, a company spokesperson said. That is important, and we welcome an open dialogue. Oops.
Well, I love what he said. He said, remember Wal Schwan took over from Ben Van Beurden earlier this year. Love these 2 quotes. He said they need to undergo a, quote, fundamental culture shift. I love when I hear CEOs talking about culture. You don't hear about that enough. Culture. I'm a big culture guy. I got a whole podcast about how you get a good culture, the business model will take care of itself, but that's for another thing. He says they need to do that culture shift to regain investor confidence. Also love this. He states they need to be ruthless on focusing capital allocation and should only invest in low carbon operations that have a clear pathway to profitability. He's pulling no punches.
No. And though, if you read between the lines in this, he says we have to be ruthless to focus on capital allocation that invest in low carbon operations with a clear profitability. That's natural gas.
Well, you want to
the only one out there.
Here is a little, I don't want to say inside baseball. I think people realize this, but how do you become elected the CEO of a publicly traded huge company like Shell? There's a board of directors. And they hire a recruiting firm, or I mean, and not in this case, he was promoted from
Or
within, but you are appointed by the board of directors. So when the
or
board of
your president,
directors,
your son of the president.
or that, so when you get appointed the CEO, that means you've been selected by the board of directors. And so listen closely to what a new CEO says the moment he gets the job. Because guess what? He's repeating the mandate in which he and the board of directors have agreed upon. Because why do you hire us? What's a CEO do? Culture and sets the direction. So if the board of directors and the CEO are not aligned on the direction, he wouldn't get this job in the first place. So the board of directors has been thinking about this for at least over a year now. They've now have an opportunity to replace the guy, or not replace the guy, but the new person at the top now has the ability to push that. So whenever I hear things like this, don't just think this is some rogue CEO out there and the board of directors. No, the board is behind this, or they would not let this be happening. I'm going to tell you that much.
Exactly. I thought it was very good, but this is also telling into BP. I think also this has another story coming along the next one here, Michael, and the BP's 4.1 billion bet on renewable natural gas gets underway. Michael, it's RNG. We have LNG, which is liquefied natural gas. Then we have RNG, which is renewable. And some of our best podcasts have been with Deborah Wald, who we talked about this a year ago. And that is taking waste and turning it into pipe ready natural gas. And I applaud this in the small town of Medora. Where is it? Southern Indiana. The facility will start taking landfill and turning it into our goal is to make large material business that's going to be a strong profit center for BP. I applaud this. RNG, or renewable natural gas, is absolutely one. Let's take our landfills and let's absolutely turn them into power plants.
Yeah. And I mean, I think this is awesome. Basically, what you're doing is you're capturing the emissions from landfills and being able to sell it back into the pipeline. I think we need to be honest that you're not getting the same premiums as what I would call that sweet American natural gas.
No.
I mean, it's not wet BTU gas. It doesn't go for that high premium. But what it does do is, again, lower the emissions. The interesting part, and I think why environmentalists are not for renewable natural gas, is they still believe that when you burn the renewable natural gas, all of the emissions that you have captured, their claim is you're emitting them in the first place. But I disagree, because what you're emitting from natural gas is less than the landfill is taking in. So there is a drop in overall emissions still. And that's where the pushback comes from the environmentalists. So it's why you haven't seen this getting pushed much. Remember, BP purchased Arcaga Energy earlier this year and are dumping about, again, 4.1 billion into this. I love this. I love RNG. We like this. We've heard Toby Rice over at EQT. We love them talking about responsibly sourced natural gas. This is a new fling renewable natural gas, which is probably more closer to what should be happening. And one day, hopefully, we see this in every landfill.
Oh, I agree. Except the landfills with windmill blades, because they don't produce methane. They just sit there and rot and destroy.
It's a good point. It's a good point.
Okay. All right. That's it for me. And the next one. Real quick. Going on to Exxon. So back off to you, dude.
Yeah, we'll cover that here quickly, but we'll first give a quick glance at what happened in the overall markets. S&P on Friday was actually up about 1.8 percentage points. NASDAQ trades up 1.7 percentage points. Dollar index actually drops a little bit. We did see Bitcoin drop about 0.25 percentage point. Crude oil stays fairly flat after absolutely getting pounded this week. Brent crude oil trades down 84.94 on crude oil. That West Texas Intermediate 82.79. Really close out the first down week in about 4 months, or in about 4 or 5 weeks. And if you didn't have a chance to see Paul Sankey, we love him. He's one of our favorite research analysts at sankeyresearch.com. He went on CNBC on Thursday to kind of talk about what happened specifically this week in the oil and gas space. I mean, if you've been hearing us pound the table for fundamentals are now becoming what is driving oil prices up. You wonder why prices this week are down. Well, in his opinion, and I would recommend go watching the segment. You can find it on Energy Newsbeat. His analysis and the prevailing wisdom on the street is the current trade right now among large hedge funds and the machines are long oil, short bonds. Well, when you unwind that position, say you have to sell bonds because the bonds are getting so cheap, or you have to roll that contract over, you have to unwind that entire position, which includes a long on oil. So when you have large hedge fund having to unwind their position to basically rewind it up with the new rollover contracts, the machines then who are watching just overall trading volumes begin to then have a cyclical cycle that rolls into it. So in his opinion, and I probably agree with this is much more of a technical spill in terms of oil prices than this is a fundamental switch in the overall dynamics of supply and demand. So I wouldn't be too concerned that oil prices have dipped so far. I think Stu's tossed out $100 oil, especially with what's going on in Israel right now. I do think that's still possible. I think the more interesting note, Stu, is natural gas, $3.33 with really no end in sight. We're seeing cooler weathers come in as we see fall come in. This could be something where $4 or $5 natural gas in the short term, and when I say short term, I mean 2 to 4 months, could be possible, and that could really kickstart a lot more natural gas development, which we've been teed up for. We've talked a lot about LNG. This could get a lot more natural gas projects approved, and I mean big ones. I'm not talking about, a couple ducks in East Texas. I'm talking about large-scale LNG projects, specifically like Saudi Arabia had and the Middle East has been dealing with. You could see a kickstart in those as you see natural gas prices continue to rise here.
Oh, I agree.
Yeah. So I think the next thing, we got to just talk Exxon here. So, I mean, as we listen to this on Monday, obviously you've heard the rumors, and as you listen to this, we're recording this on Sunday. So if the rumors actually become true, we'll try to throw in a new segment. But at the time of recording this, it's just rumors right now. The rumor is ExxonMobil is looking and on the verge of purchasing Pioneer Natural Resources for an estimated $60 billion. Pioneer is an exclusive Permian operator and was one of the first companies to really take the Permian horizontal in terms of large-scale developmental. Scott Sheffield, the longtime CEO there since 1997, after their combination, after the combination with Parker and Parsley, he takes over as CEO, set to retire at the end of this year and turn over operations to COO Richard Dealey. But I don't think that's going to happen, Stu. I think this is a deal that I think when you look back there, multiple people in the past 6 months have said this is probably going to happen. Exxon is going to go buy somebody. They're going to buy, they're going to buy Pioneer. They're going to buy EOG. They're going to buy Oxy. They're going to buy somebody. And, yes, buying, someone for $5 or $10 billion does good, but we knew that in this new age of M&A and consolidation, we knew something like this was going to happen. And I think the real question and the real analysis point from this is exactly, and Stu brings a great article here, Exxon investors ready to embrace buying existing oil over new drilling. This is a topic I love because this comes back to the idea of, well, if ExxonMobil has the ability and has all of these premium locations that they could drill, why do they need to buy Pioneer, basically the number 2 Permian player, for $60 billion? Is that because their Pioneer's locations are better? Interesting. So now what you're seeing is this is always what people say. Don't listen to the words that I say. Listen to my actions.
Right.
Everyone
listen
keeps
to my
telling
actions.
us they have all these crazy locations and thousands of double premium locations. We got to get some merch that says that. And everybody's got these accretive locations. Yet what are people actually doing? Exxon says we're just going to have to go buy. We're going to have to go buy that 700,000 BOE a day for $60 billion. We're just going to have to go buy it. What is we can't. Why would we drill when we can go acquire? And I think that absolutely has been proven true. We've seen the rig count drop tremendously. I mean, I don't have the rig count. Let me pull up the rig count here. But because that dropped on Friday.
The business models that you and I have
it
talked
dropped
about.
4.
It's what?
Oil prices have been up year over year, oil prices are up about 50%, and the rig count has dropped by 143. It's watch what I do, not do what I say.
Right. Michael, the best investment deals you and I have been working on, and when oil companies ask us to evaluate deals, and we take a look at this, some of the best deals for investors end up with a split between drilling new wells and buying PDP. And when you take a look at that, that's exactly what the big boys are doing.
Well, it's a little. I would say it's a little bit more nuanced with that. Every company has a few good locations. The problem is nobody has everyone claims they have 1,000 good locations, and that's a scam. So what you're seeing is Exxon may have some good locations, but in their macro analysis, they want to grow. They have a target in growth. They see that target for growth is easier and quicker by using M&A to just acquire that missing BOE per day instead of going out and drilling it. So what does that tell you? The risk off play is acquisition. So for me, what this says going forward is you're going to see a lot more of this. Chevron is squarely on the clock right now, and they've got EOG, Oxy, Diamondback. There's a few others out there that are, in my opinion, I'm sure hard at work talking to the ConocoPhillips, the Chevrons, and probably the Shells of this world to say, what next?
Right. And I think you're going to see more and more of it.
So who do you think, I mean, I have my opinions, but who do you think is the next company? Give your prediction right now, because everyone's going to be throwing out the predictions. Let's get us on the record. Who do you think the next M&A combo is?
Well, that's a big open-ended question. They're almost all in play. And the reason for that is you're going to take a look at, does a company like Exxon or BP or anybody else actually want to come in and say, I want into the Balkan? Do I want to get into the Eagle Ford? Eagle Ford's on the way down in M&A activity. So I think that it's going to be, you take a look at, Continental's coming back, and it went back private. You take a look at, is it a Haynesville play? Or is it a Marcellus play? It's going to be play driven, I believe.
No, you're absolutely right. You're absolutely right. And that's why I think there's one company that I think I'm going to take off the table. I don't think Oxy's going to sell.
Nope.
I think they could sell their Colorado assets, but I don't think Warren Buffett is necessarily looking to cash out per se. And I think he's going to be very picky and probably doesn't want to own Chevron stock, because I think that's the other end of the deal with this Exxon Pioneer. We don't know whether it's going to be we don't know what the final value is going to be. I mean, 60 billion on a market cap of 50 billion for Pioneer seems a little light. Seems to be that they got to get a, 65, 70. I don't know what their corporate models look like. We'll have to plug the numbers in, but seems to be that's a little light for Pioneer. So the question will be, is that a mix of cash, stock, or currently as of 2020, their last quarterly report in 2023, they got about 30 billion cash on hand. So they're going to finance the rest to pay all in cash, or are they going to finance that with a mix of stock? And I think that will tell me what happens with Oxy. Because remember, Warren Buffett is still the largest shareholder in Oxy and has a lot of control and a lot of say. And I wouldn't say control, I would say a lot of gusto to be able to say, hey, no, if we're going to sell, I want all cash. And if he wants an all cash offer, I doubt anybody but Exxon's going to be able to do that. And Exxon just took themselves off the table by acquiring Pioneer. So I think unless Warren Buffett is looking to take Chevron stock, and I think Chevron or BP are probably the only two companies that could buy Oxy, unless he wants to do that, which I don't think he does, because he could do that right now. He could do that if he wanted to, but he's not. Why? Because I think he wants the large independent. I don't think he wants the large integrated company, because I think he sees that they're not as tied to the commodity price, which, again, he's playing a commodities boom here, clearly, and he's playing off the macro theory of energy is going to become more scarce, which means those things are going to become more valuable. So I don't know what the next is. I think EOG is probably the next one off the table. Chevron, EOG makes sense. The problem is EOG is a little bit spread out. They have their core Permian operations. I think you're right, Stu. The plays are going to be extremely helpful, but I'm taking Oxy off the table. I think they're going to stand tight and not, and if anything, they're going to try to swoop up some of the smaller guys in order to prop themselves up and maybe 2 years from now they look to sell. But I think Warren Buffett's holding out right now.
I would agree, but let me throw this prediction out there. I think that Oxy has teed itself up for carbon capture, and I think that it has done an outstanding job getting into that multi-trillion-dollar market.
Yes.
We've seen the quote-unquote supposed death of ESG investing. I called for a great awakening in that last year. I think that within the next 2 years, you're going to see the lack of funding being able to go into carbon capture. Oxy is teed up right now for success as long as the gravy train for funding keeps going, because you're going to see the market now coming around, and they're saying, is the regulatory issue going to start coming in and saying, are the mandates going to be on declaring your carbon output? Well, then you got to buy carbon credits, or you got to do carbon capture. Carbon capture is a market that is solid today. I think that if it goes in a certain way, carbon capture market is going to fall the way of wind. How many years from now? I'm not sure. But wind is becoming unsustainable. And I think carbon capture market is going to be unsustainable. So Warren Buffett, I think, is on track now with Oxy. I think Oxy for the long term is not a good play. Make sense?
No, I agree. I think, again, it's crazy. So I think, not that this is we will obviously, if we will probably, once this actually happens, we'll probably have to do a separate, almost breaking news podcast to probably break down all of the details in there. We may have to do a little deal valuation. I think it'll be interesting to see what the value comes down. But there's so much that goes into this valuation. I mean, Pioneer is stripping lithium out of their water and reselling that lithium on the open market. So there's a lot more that goes into it than just some PDP and some PUDs. So very interesting to break this all down. What should people be worried about, Stu? I mean, I know this whole thing this week is going to be all eyes on Israel. Give us a prediction.
I think that we're going to see we're not going to know any impact on oil and gas until we see the retaliation or the response from Israel. The tanks are all lined up, and I believe they're just going to totally annihilate Palestine and, the Gaza. So it's going to be horrific. Don't know. I do pray that everybody in the country stays safe. There are several demonstrations being scheduled today. Stay safe, pray, and watch what happens to energy.
Yeah, no kidding. So you can keep it here at Energy Newsbeat for all of your latest breaking news. But with that, guys, we'll let you get out of here. Start your week. We know you got a lot going on this Monday, a lot of meetings. Probably most of those meetings are worthless, but stay strong. Thank you for checking out Energy Newsbeat. For Stuart Turley, I'm Michael Tanner. We'll see you on Tuesday, folks.